Okay, let's look now at the banking setup. So what we've got here is our virtual jars, okay? We're moved into the 21st century and we've got these virtual jars under our primary account. So what's going to be happening is we've got our income coming in here, and then that income is going into our primary account. So one of the great things about the MoneySMARTS system is you don't need to have lots of banking structures. You don't need different banks for different things. Effectively, you've got the one primary account, which in some cases might be an offset account. And then effectively, you've got your debit card, which is linked to also your primary account. And then you've got your credit card. So in theory, we can have 2 or 3 of the bank accounts, but they're all directly paid from that particular area. Now, if you don't want to run a credit card system, that's okay. MoneySMARTS doesn't have to run with a credit card system. You will then just be doing direct transfers from those direct payments. So direct debits will be coming from your primary account. And I'll show you the flow of money in a slide shortly. So what we're thinking about here is this whole concept. We've got the money coming in, and then effectively we've got that money flowing out. Now, the money that we haven't used for provisions is sitting in there potentially offsetting our mortgage or earning us interest if we have a savings account. And of course, all of our trapped surplus is also sitting in there doing all of that heavy lifting for us. Now, we have seen over the last couple of years, a lot of banks are now offering what they call multiple offset accounts. So you can set up multiple different types of offset accounts for different needs, but in theory, they still live under the primary offset account. So we want to make sure that if you do want to sort of carve off some money, to still make sure that it's offsetting your mortgage account. So making sure that it's offsetting that mortgage account. So this is the way in which we would set that up. So we have effectively our income coming in, whether it's weekly, fortnightly, monthly, all coming into the single one account. Lots of less bank statements and lots of less worry about money. Then we have the living and lifestyle jar, which is our 7-day float. So we do a weekly transfer in over there and we use that debit card. That's ultimately what we're going to be spending our money on for that 7 days. Now that will stop in excessive spending, because once that money runs out, just like the jar system, there's no money left, okay? So that means you're going to be encouraged, or you're going to build behaviour to try and get to that next 7-day period where that next allotment of money is coming in there. And that's all set up once you do your accounts. Then you've got your credit card, which you can potentially put all your fixed costs on, those bills. What we don't want to be using credit cards for is things like holidays or any type of discretionary spending, or we certainly never want to use a credit card to pay for our living and lifestyle expenses. So that is an absolute no-no when it comes to doing that type of work. And then you can see the direct payments and then the loans jar, which is pushing out all of those. Now, if you have investment properties or any other income coming in, again, all of that rent comes into this primary account. Okay, so that is the way in which the banking setup works, and effectively it helps with putting money on autopilot. So it just allows the systems to just working in the background. You'll set up a regular transfer for that money to come over into that lifestyle and living and lifestyle 7-day float account, and that's basically it. So that's your banking structure. If you want to have extra offsets, that's okay, but they're not essential as long as you run that single account and then you've got the debit card and the credit card. So that is how we set up our MoneySMARTS banking structure.